This week, we're talking restaurant performance and jobs data. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us, as always, is livestock economist Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
All right, so we'll dig into some of the details of this report. We're going to talk a little bit about the suspension of the talks or the suspension of the strikes in terms of the ports. But first, let's recap what happened this week in the markets.
Yeah, so we generally have another week of some higher prices as we look at cattle and hogs both. Live fed steers were 90 cents higher this week. That now puts them $4.30 above where they were a year ago at this time. And those feeder cattle markets this week were anywhere from $1 to $4 higher. The December live cattle futures contract closed up $2.45, and the November feeder contract was up $3.50. And that was despite corn up again this week, up 7 3/4. The December corn futures contract. The choice box beef price was up $1.10 this week. On the hog side, cash barrows and gilts were 60 cents higher on the week. The December lean hog futures contract was up $2.90. And we also gained 75 cents in the pork cutout value. That was really led by what was stronger bellies this week.
It's really nice to see stringing a couple of weeks together of higher prices, of decent movement. When you take a look at this from kind of like taking a step back and in that big broad overview, is this potentially what we could see for the next couple of months, knowing what's going on in terms specifically on the cattle side of things with herd size and still not knowing whether we're really expanding or not?
Yeah, so perhaps I do think that these cattle numbers will continue to get shorter from what we know about herd inventories from back in January. That certainly could spell tighter supplies going forward. I think this is the juggling act between producers and consumers. How much are consumers willing to pay if supplies get even tighter as we look ahead? So it's nice to have erased some of the lows that we would have seen a few weeks ago and see some higher prices for producers now.
All right, let's take a look at slaughter numbers as we look at this past week. Talk to me about cattle and hog slaughter runs.
Yeah, so USDA tells us for the week ending October 5th, a run of 611,000 head of cattle this week. That's just 1,000 head less than what we did last week and 16,000 head less than what we did last year. While on the hog side, a run of 2.586 million head this week. That's 34,000 head more than we did last week and 11,000 head more than we did a year ago.
And when we're talking about those year-over-year comparisons?
Yeah, on the cattle side, cattle slaughter down 3.8%, while hog slaughter is up 1.1%, Meghan.
All right. Just a couple of reports this week, probably more on that consumer and the demand side of things. Restaurant performance index was out. Talk to me a little bit about what you're seeing from those August numbers.
Yeah, so number one, when we look at the August data, it was up 1% relative to where we were in July of this year. So stronger restaurant performance index, yet that restaurant performance index remains below 100 in August. So below 100 is contraction. So that's 9 straight months of a restaurant performance index in the contraction side. When we look at the current situation, same store sales and customer traffic seem to be helpful to pushing that current situation index higher. I think when we look at the expectation side, though, there's still a lot of uncertainty about where's this economy going forward, and talking about this on a day where markets were strong in general on the future side, but still some worry, I think, looking ahead about just the overall economy.
How much will, and we're going to talk jobs here just in a second, but what's going on with jobs, what we see continue in terms of interest rates. If we start to see some more strength in some of those areas, could that help maybe improve the pessimism of restaurant owners moving forward?
So perhaps it does. It's interesting when you see what was, I think, a fairly good response to the jobs report today by the stock market. Some concern then that, well, the Fed doesn't have to lower rates as quickly as some would have thought earlier. So it's this kind of fine line that we're walking of, of where this economy sits and what it means ultimately to money in consumers' pockets for food purchases. I always like to remind us that we came through what were some incredibly strong periods in 2021 and 2022. And so I don't want to be overly pessimistic about where we sit today, but folks are going to look back at this data since 2020 and go, "What happened?" I'm waiting for the generation that starts in the livestock economics business. I don't know, 2035 or so, and they're going, "What happened?" COVID hopefully will be way in the rearview mirror by that point, and some won't even remember all the volatility that we faced.
Jobs numbers out. September job report was a pretty positive one.
Yeah, absolutely. We added 254,000 jobs according to the Bureau of Labor Statistics today. That well exceeded the pre-report midpoint of 150,000 jobs added. We also saw the unemployment rate fall to 4.1%, down a tenth of a percent from where it was in August. So very strong numbers. When you look at revisions as well, so both July and August jobs data were revised. That added 72,000 more jobs in those 2 months combined than what had been previously reported.
I want to talk. I think I heard this morning on the radio on my way into town that the unemployment claims have kind of leveled off as well. That haven't um, have been more consistent. I guess maybe that's the right term to use there. Does that indicate that maybe we're not seeing so we're not seeing as many initial claims and people are holding on to jobs, but does that tell a kind of a two-sided story to those numbers?
So perhaps it does. I think it's a good point to me when you look at number one, the jobs data today, strong. So we appear to be creating more jobs, so giving consumers a chance to have employment. And number two, we aren't seeing any kind of slowdown percolate through in what are jobless claims. So I think all in all, you look at the jobs report, that's positive. So we kind of have both sides of this picture today. When you look at restaurant performance index, not as positive, but the jobs report certainly does look very positive. And I'll say at the end of the day, we just want more money in consumers' pockets that they want to spend on beef and pork in particular. And that's the balancing act that we continue to look at.
Now, we've talked about this throughout this whole inflationary element and about what the Fed is doing in terms of rate cuts or rate hikes. Is we continue to see, or if we see more months where we have consistent job growth, does that slow what the Fed is doing to address inflationary issues?
I think it does slow their response. I think there was a lot of surprise at the half point cut that we got first, and I think that was again some concern about what was happening to the overall economy. Now, when we're getting some of these positive signs back out, I think the last thing the Fed wants is inflation to return, and so they're going to balance very hard those pieces in terms of future rate cuts down the road. And I think a lot of folks have already said, "Hey, there's no way this next rate cut will be a half a point cut." We've seen too much growth in the general economy to see another half a point cut if the Fed were to cut rates again.
All right, before we get out of here today, port strike, first time in over 50 years, more than 50 years in the East Coast South on Tuesday, 3 days of work stoppage, came to a deal on Thursday night, or temporary, gives them time to what the wages was a big win in that negotiation process, but there's still some other things that need to be ironed out. We send a decent amount of beef and pork out of those areas. What does a 3-day disruption potentially do in terms of that global demand and reliability that the U.S. is a good supplier of beef and pork?
Yeah, so thank goodness we were ready for what was the strike, and I think a lot of work being done in preparation that probably means the short term that we were down doesn't have any big implications at this point. I guess at this point, I'll say let's make sure by January 15th, which is I think where we extended this one to, we get the final agreement in place. Let's not come back January 15th and have a strike that lasts for a longer period of time. I think we're okay, but it just, again, I'll say there's a lot less flexibility in these markets today than I think there has been in the past. So what might have been small effects in the past seem to get amplified today, and so I want to be a little cautious about saying there's not any large impacts. I'm certainly glad this only lasted a few days and not longer. The longer it was going to last, I think the worse it would have been in terms of effects on beef and pork markets in particular. So we'll see, but let's hope we don't come back in early January and start talking about that strike continuing if they can't come to an agreement on some of the other terms.
All right. That, and I guess, just kind of closing comments, final word there. We talk about the importance of export and trade markets, and reliability and consistency is a key component of that, right?
Absolutely. So we always want to be moving product into those markets. I think those markets equally always want to feel like they have a consistent supply from us, especially if they're going to grow long-term quantities that we're going to trade with them.
Speaking of trade, next week, monthly trade data, retail prices come out, and consumer sentiment. Anything you're looking for or standing out, or anything stands out that you're looking for in next week's reports?
Well, I do think on the retail prices side, just where do beef prices go in front of us? We were up the previous month in terms of higher beef prices. Are we going to keep pushing those higher? There's been a lot of back and forth about where live cattle prices can go when we've had trouble with boxed beef prices of late. Yet retail prices have been at record or near record levels. I think that whole chain from slaughter to retail is going to be important, and I'm curious to see what we get out next week.
I want to know where bacon prices are.
I expect higher bacon prices next week, especially given bellies this week.
I'm gonna hold you. You heard it here first. That's what Scott Brown says. All right, Scott, have a great weekend. We will talk to you next Friday.
Sounds good, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments online. If you want to check out what's going on with markets or a rundown of the markets every day, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.